Bitcoin is a new kind of money, completely digital, existing only on computers worldwide. Unlike dollars or coins, you can't hold a Bitcoin in your hand. It was designed to be a currency free from control by any single person, company, or government. This is a big shift from traditional money, which is managed by central banks. Bitcoin lets people send value directly to each other. No bank required. What started as a niche idea is now a major financial asset. Big companies and investment funds own it, and millions use or invest in it globally. Its price is tracked by news channels and investors everywhere. Because it's not controlled by governments, some see it as a safe haven during economic uncertainty. But Bitcoin's value can swing wildly, what's called volatility. News, regulations, and global events can all cause these swings. Understanding what moves Bitcoin's price is key for anyone interested in digital assets. In this video, we'll explore a recent example, how a major US-China trade dispute triggered a sudden drop in Bitcoin's price. We'll break down the events, see how markets reacted, and explain why global politics can shake the world of crypto. This will help you see how digital assets are deeply connected to real-world events. Even though Bitcoin is digital, it's tied to decisions made by world leaders. Its story is just beginning, and its impact on global finance is growing. Let's dive into how one international conflict sent shockwaves through the crypto world. Understanding these forces helps you navigate the fast-changing landscape of digital money. Yesterday's market drop started with a long-simmering conflict, the US and China's trade war. A trade war is when countries use tariffs, taxes on imports, to gain an advantage. The goal? Make foreign goods more expensive and boost local industries. Recently, tensions escalated dramatically. China announced strict limits on exporting rare earth minerals, materials vital for tech, cars, and defense. This wasn't a minor tweak, it was a major policy shift, flexing China's control over global supply chains. The US saw this as a direct threat, not just to its economy, but to the world's. The conflict moved beyond tariffs to a fight over the building blocks of modern technology. Global markets braced for impact. When economic giants like the US and China clash, the effects ripple worldwide. Investors everywhere grew anxious about what this escalation meant for their money. Stocks, currencies, and even Bitcoin felt the pressure. The world watched as the stage was set for a major financial reaction. This was no longer just about trade, it was about control over the future of technology. The uncertainty sent shockwaves through every market, and the fallout was just beginning. China's new export limits targeted rare earth minerals, 17 elements crucial for high-tech products. China dominates global supply, giving it huge leverage. The new rules were broad, affecting any product made with Chinese rare earths, even if finished elsewhere. This move sent a clear message. China was willing to use its economic power aggressively. Suddenly, industries worldwide faced a crisis. Where would they get these essential materials? The risk experts had warned about became reality. Major sectors like defense, AI, and green energy were threatened. The decision exposed how fragile and interconnected global supply chains are. Companies scrambled to find alternatives, but uncertainty soared. China's action was the first domino, sparking fear and instability. The impact quickly spread from manufacturing to financial markets. The world realized just how much one policy change could disrupt the global economy. The US responded fast and forcefully. President Trump called China's move economic blackmail and hit back with a massive tariff, 100% on all Chinese imports. This would double the cost of goods from China, pressuring American companies to find new suppliers. The tariff was set to take effect in just weeks, giving businesses little time to adjust. The US also imposed new export controls, blocking critical software from reaching China. This targeted China's tech ambitions, aiming to slow its progress in AI and advanced computing. Diplomatic talks were cancelled, and rhetoric intensified. The world saw this not as negotiation, but as economic warfare. Investors reacted with alarm, fearing a prolonged conflict. The escalation created a storm of uncertainty across global markets. Supply chains were threatened, and the cost of doing business soared. The message was clear. Neither side was backing down. The economic standoff rattled markets everywhere. The fallout would soon hit not just stocks, but the digital asset world as well. The stage was set for a global financial shakeup. As the trade war news broke, financial markets trembled, and crypto was hit hard. Bitcoin, which had recently hit all-time highs, plunged over 8% in hours, dropping from $117,000 to below $108,000. The sudden sell-off erased billions in value and shattered investor confidence. Fear replaced the optimism that had fueled the rally just days before. Investors rushed to sell, worried the price could fall further as global uncertainty grew. In times of crisis, risky assets like Bitcoin are often the first to be sold. The debate over whether Bitcoin is a safe haven or a risk asset was answered. On this day, it acted like a risk asset. The panic spread to crypto-related stocks like Coinbase and MicroStrategy, which fell 3% to 12%. The entire crypto ecosystem felt the shock. When Bitcoin falls, it drags down the businesses built around it. The sell-off showed how quickly sentiment can shift in the digital asset world. Crypto's volatility was on full display. The impact rippled far beyond just Bitcoin holders. The downturn didn't stop with Bitcoin. Ethereum, the backbone of many crypto projects, dropped nearly 6%, erasing billions in value. Investors sold off riskier assets across the board. Smaller cryptocurrencies, altcoins, were hit even harder, with many plunging 20% to 40%. When Bitcoin falls, it often triggers a chain reaction throughout the crypto market. Traders sell altcoins for Bitcoin, then cash out, amplifying the decline. Market sentiment is heavily influenced by Bitcoin's price. As fear spread, confidence in the entire crypto space collapsed. The result, a self-reinforcing downward spiral. The volatility in altcoins highlighted the risks of newer, less established projects. A small drop in Bitcoin can feel like a crash for these smaller coins. The sell-off underscored how interconnected and fragile the crypto ecosystem can be. The fear from the trade war quickly spread to traditional markets. U.S. stocks tumbled, S&P 500 fell over 2%, Nasdaq nearly 3%. These sharp drops signaled widespread panic about the economic fallout. American companies rely on China for manufacturing and sales. Tariffs threatened profits. Investors rushed to sell, pushing markets down worldwide. Currency markets also reacted. The U.S. dollar slipped against the euro and yen, reflecting worries about the American economy. Yet over the week, the dollar remained strong as investors sought safety. The turmoil showed how tightly connected global markets are. A decision in Washington could trigger sell-offs in Tokyo, Berlin, or São Paulo. The financial system is a web. Pull one thread, and the whole structure shakes. The U.S.-China conflict was a major shock, rattling every corner of the market. From stocks to crypto, no asset class was spared. The world saw just how fast fear can spread. The lesson: global events can move every market, old and new. Why does a political dispute crash Bitcoin's price? Bitcoin is decentralized, but its value is driven by real people reacting to real-world events. When uncertainty rises, investors sell risky assets, including crypto, and seek safety in cash or gold. Bitcoin's volatility makes it a target during market panics. Economic slowdowns mean less money flows into crypto. If people fear for their jobs, they're less likely to invest in digital assets. Major events also shift the narrative. Optimism can turn to fear overnight. Suddenly, Bitcoin is seen as risky, not revolutionary. These shifts in perception can move markets in an instant. The past week proved that crypto doesn't exist in a vacuum. Bitcoin and other digital assets are deeply affected by global politics and economics. The U.S.-China trade war showed how quickly fear can spread from world events to crypto prices. To understand crypto markets, you have to watch the headlines, not just the charts. News about international relations and economic health shapes investor mood and price action. Good news can spark rallies. Bad news can trigger sell-offs. Volatility isn't random. It's a reaction to real-world events. Bitcoin's journey is tied to global affairs because people trading it are part of that world. Their hopes and fears are reflected in every price swing. As crypto grows, following world news is more important than ever for understanding this fast-moving market.